Evening. I'm Epstein, and here we are with your Monday evening update. And this update is for the metal markets, and we'll be talking on this Monday. Good evening, all. I'm Epstein with your metal market wrap-up, and this wrap-up is for Monday, and we're at the 3rd of February, 2025, about 6:20 p.m. Central Time. I wish I could say that I was surprised by any of this, and I'm not. Here's why. President Trump said he was going to put the tariffs on Saturday. He did. He never said how long they would stay on. He said he'd put them on. I brought up on my weekend updates to my clients, and I said, why Tuesday are they going in? The only thing that makes sense is either he wants his computer systems to catch up with all they're going to build. They can do that at any point, so you don't need that. I said, this is about setting up a fever pitch in Washington to get both Mexico and Canada to get to the table, get something done. Just like all politicians around the world. No one does anything until you push them to it. Think of our budgets. Think of when we got to get something passed in Congress. It's never done way ahead of time where they get this all set up and it's easy flowing. Well, as a businessman, he understood that. Now, the good news is, and there is good news, the tariffs went on. He kept to his word. The tariffs are paused. It shows that he's reasonable. The good news is you're going to see 10,000 troops on the border between the United States and Canada, and 10,000 more, the word is more, according to Ms. Sheinbaum, the president of Mexico, troops hitting down there. In addition, this isn't all about immigration. Now it's about the fentanyl problem. And if that's what it's about, fine. Here's what it didn't do. Nowhere today did you hear any talk about the trade deficits that we have with those countries. Nowhere. So he has separated the issues. That's basically my take on this. And at the same time, he's sending messages to everyone. He went on today and talked to Ukraine. Hey, you got rare metals. We need them. We want them. You've been getting all this money from us. We're defending you. We want those. Better say yes. Okay, that's one way of doing it. He said he was going to talk to China. China's seeing what's going on all around him. He'll get something out of that as well. I can go on and on down the line as to what's going on. This will all get taken care of. Does it make trading any easier? It makes it exceptionally difficult, except for about 30 days, we're not going to have the threat of a tariff hanging over us every morning that we wake up. That doesn't mean that the president isn't going to start pressing right away on the trade deficits and wrap things up. He won't wait for the end. So that's the way that I'm looking at it. Let's talk about what you're going to get tomorrow. You're getting the Red Book Group coming in with their weekly retail sales. Factory order data comes in at 9. JOLTS number, that's going to come in at 9. Remember, the last number was, 8.098, so we'll see if that still stays up there. That's the amount of jobs being offered. API numbers at 3:30. San Francisco President Daley is going to speak at the Walter E. Hoadley, I guess it's Hoadley, Annual Economic Forecast event around 1. And we saw that the Mexican and Canadian tariffs were delayed. So those are all the good news items. Now, how did you wake up? You woke up to basically a hard decline. The word isn't a crash. A hard decline in all the stock indices. They've come back. The metal market started off in gold to the upside, fell back very hard, and then came up the rest of the day. Tonight, you're pulling the plug on some of this because you've given a surprise. So now, without the tariffs, the stock market comes back. The dollar, which was up sharply today, did finish off nearly 100 points off its high. Probably gives up a bit more of that. Wouldn't surprise me at all. In the bonds and notes, we had been looking at gains in the long term. They gave that up. We looked at bids happening here, but something else happened today. OPEC is meeting. And OPEC has said they're still going ahead and they're going to count on that they can do a release. I want you to listen very carefully. They can do a release of more oil in April. In other words, production increases. That's not bullish. And yet a big rally in the nat gas is that cold weather sitting everywhere. Plus, the market's wondering, what do I do with all this news that's going on back and forth? I think that's very logical. So when you look at the gold market, here you are back up to 28.25 for the week. That's all I'm talking for the week. You're up $13, about a half a percentage point. But if you finished right here, it's an all-time high close. When you look at the chart, you had a huge outside day to the upside. If you've taken my outside day courses, you understand the importance of that. I hope you have. The pattern is one of higher lows, higher highs, which is bullish. The support's all the way back at the 18-day average. To get there, you will break the uptrend temporarily. So I'm not saying that that's where it has to go. But look where the market keeps stopping, the upper Bollinger Band. This is classic, still bull market situation. Will there be corrections along the way? Of course there will be. Will this turn bearish? I don't think so. I think that you're into a nice bull market at this point in time. And to add fuel to the fire, you have an embedded reading going with it, which to me means the pros will buy the dips in the market until the red line closes under 79. Then they'll look for price and the 18-day average to come together. You don't want that. What you'd prefer is you don't get that reading under 79, in my opinion, and the market just gradually, in this nice manner, keeps moving to higher highs, and that's what I'd love to see. When we look at the gold-silver ratio, as long as you're under the 18-day moving average of closes, the number keeps getting smaller, which means that you need what? Fewer ounces of silver to get an ounce of gold. Well, that's friendly. Silver market came roaring back today, late in the day. It held, and it's been fighting a battle. First, the battle was to get over the 100-day average in green. Then when it got over it to the Bollinger Band, now the support becomes that, probably all the way down to the 18-day average here of 31.37. I'm not keen on the market in the sense that it's overbought. Overbought money isn't like when a market embeds. You won't have me saying, the pros are going to buy the break. No, I don't think they're going to do anything except take money off the table up here like they're doing against the upper Bollinger Band. Not as bullish as the gold market. In the copper market, you went down today, hit the lower Bollinger Band. What do I teach you the first time when a market goes down? Here was the market on Friday. If you go up here, you got resistance now at the 18-day average in red, and the green is the 100. Above that's the 200-day average to the Bollinger Band, and the big supports at the 419.68 level, which is the lower Bollinger Band. If you hit any of these Bollinger Bands first, you're not embedded. I think the pros come out of the market whichever way. You went down to the low side, hit it. Do you disagree? And came right back to the 18-day average of closes. Are we trending? Absolutely not. You have a higher high and a lower low. That carries us to the platinum. Now, as of, and let's get to this if I could. Yeah, it'll let me do that. Here's Friday. And as you know, you got 2 days over the upper Bollinger Band. I'm your broken record. You'd hear me saying, I think the pros are taking money off the table on the first challenge of that band. No, I would not tell my clients to buy over a band. You can generally do better. I see 3 areas of major support. I see now coming back to the 200-day average, the 100 and the 18. Market starts down, and it wouldn't surprise me if you still work into those areas looking for the support, but I am bullish this market. It's working off an overbought condition. None of these numbers are now over 70, and I expect that support, if it can drop there, right where I said. Last in the dollar index, the market came alive today. Again, what would you think if you get the tariffs sitting? Let's assume that no agreement was reached. We go home tonight and the tariffs are in place. Well, I would assume the dollar gets a bid, bonds get a bid, maybe parts of the note complex, and the gold. And those were my thoughts that I said over the weekend, and that's pretty much how the market did finish itself out. So as I see it, the dollar is probably still in good shape here at the 108.40 level, 44 level. I don't think traders are going to want to see it 100 and lower at 107.33 and a half, let's call that 33.80, right in that zone. But between there and there, that's the big support. And yes, I think the pros will be buying this market because all that's happened is some, if you will, delay in all that's going on. First, you got to prove to Trump in his manner that you do what you say, which means you've got to stop the fentanyl from coming across the border. Then he's going to get on to these countries, everybody, about what's going on with the trade deficit. Europe, you get ready because he's going to have his eyesight on you. Now that this is put to the sideline, you're going to be very close to next. So how do you handle them? What do you do? You're already seeing the best way to do it is what Ms. Scheinbaum did. The worst way was what Mr. Trudeau did, but at the end of the day, so far it worked out okay. Those are the things that I think you look at. Another thing I'd like you to do is learn to work with me and yourself on guide to technical indicators. You hear me talk about this all day long. You know, in the free offerings that we have, this is one of the PDFs that we put together with our good friends from Futures Magazine many years ago. I was a huge promoter with these people. I probably have every issue they ever published somewhere in here. Loved the articles. And as we did this, we did it because we had to teach people technical guidance. And while today you think you get it from the likes of Schwab and Interactive Broker and others, let me tell you, most people don't understand it, and they don't understand how it's written and what it does. I think you'll find these primers absolutely right what you want. So how do you get them? It's really simple. You go to iraepstein.com under free offers. All of them are there. We have 2 technical indicator guides. Choose them. So iraepstein.com, free offers, and move your cursor up here. And when you do so, we'll be certain to get everything out to you. I'm Ira. Have yourself a great evening. Catch up with you tomorrow.